reverse this in the second half?
Which business? CPU. So this is the season for crop protection business, and every year the working capital goes up. I must also tell you that October there is a steep fall, and the way we are working in the kind of controls we have, we will have a lowest working capital in terms of number of days. By the time March comes, we should exit at about 42 days of working capital, which is at the end of September was about 50 days. So this is the kind of reduction. Well, some of it has already happened, but we believe that it is further going to reduce.
So can we expect a commensurate reduction in debt, sir, in the second half? The debt level has gone up.
Absolutely. I think debt equity will come down, I think by March to less than 0.3 standalone.
Got it. And what would the weighted average cost of debt be at present?
So for H1, the average cost of debt was around 7.36.
Okay. Got it. Then just on the animal feed segment, any pickup in the milk market that we are seeing, and therefore, in cattle feed demand for our products?
Cattle feed demand is back. I think when as the rains recede, things are improving. You will see what we are seeing is a 10% jump in cattle feed volumes in October over September. So we strongly believe that the growth will be back in cattle feed in the second half.
And in the oil palm business, we had mentioned last quarter that we do expect to match the previous year's volumes, despite the fact that the first half has been soft because of weather issues.
We will grow over previous year. My sense is that I think just give me a minute. We are expecting growth.
FFB unlike flattish. So actually, honestly, a lot depends on the FFB arrival. So as of now, we believe that the season has differed, and we should see a higher inflow of FFB in H2. But obviously, these are all sort of depends on a lot of factors, and we can never be certain about the kind of increase in FFB arrival in H2.
Yeah, but whatever past experience we have, whenever we have such a long tail of monsoon, our tapering is also very gradual. So we are hopeful that FFB arrival will continue at decent levels till December.
Okay, got it, sir. And maybe one last thing from me on the Aztec side. Do we typically have take or pay clauses in our CDMO contracts which give us good visibility into the revenues over there? And also in the are we typically either the sole supplier or one of two suppliers for the molecules we are making in CDMO?
So the first questions, in few of the agreements we have taken pay clause there. But this generally happens after certain aging of the CDMO. Say after 3 or 4 years, once the registration is over, we get a clarity of the volumes, annual volumes generally, then this clause is put into the agreement. But yes, overall, slowly we are having taken pay clauses. Typically, CDMOs are not exclusive in nature. Mostly the buyer has two sources. So it is currently almost all the CDMOs will have at least two sources of. We will be one of the source, other source might be some other countries.
Okay, got it. And also just to clarify one thing that was mentioned previously on the call, the total number of molecules at Aztec right now is 9, which basically includes 8 older ones and 1 new molecule. This is in CDMO, I guess. Is what I'm referring to. Okay.
Yeah, CDMO.
Got it. Thank you so much. Yeah, all the best.
Thank you. The next question is from the line of Rikin Shah from the Boring AMC. Please go ahead.
Hi, thanks for the follow-up. So I can see that the inventory positioning has lightened quite a bit from FY23, where it was 295 crores to 196 at the end of FY24, and we're down to 150 crores. So in our present inventory situation, how much of the old high-cost inventory is still left, or is it out of the system now?
This is Aztec you're talking about?
Yeah, Aztec.
Okay.
So
Majority of the high-cost inventories have moved out. So whatever remaining is there will be Q3, which will be moving out.
Okay, so finally, Q3 should be the last quarter of the...
Yes.
Okay. And so then after Q3, at what particular scale or, sort of volume can we see an EBITDA break-even in the enterprise side?
It's very difficult now to say because the demand position, pricing, everything is changing so rapidly. We are not able to give certain forecast of 3 or 4 months. But only thing we are seeing a little bit positivity in the market in terms of demand, but we have to get a feel of it because these are until and unless we have that concrete demand coming up, we go into negotiations. It is very difficult to say right now what will be the capacity utilization, EBITDA breakup, means EBITDA one.
Okay, got it. Yeah, that's it for me.
Thank you. The next question is from the line of Sarvan Vora from Premier Capital. Please go ahead.
Yes, sir.
So are you there?
Am I audible? Hello?
Yes, sir, you're audible.
Sorry, my apologies. Thanks for the follow-up. My question is again for Aztec Life Sciences. So as the CDMO share gains salience this year again, so when as a consolidated entity do we start to see profits again?
What?
Profit again, consolidated entity.
Okay, I've understood the question now. We are trying very hard, and with 1 or 2 more contracts, if they come our way, which are under negotiation, we are hoping to break even in Q4. No, in H2, which means that we will be profitable in Q4.
Right. Got it, sir. And sir, when you say that Mr. Yadav, you mentioned that you are seeing a lot of inquiries on the enterprise side, but the realizations remain low. So any anecdote you can share from the past where how much time it has taken when you start to see volume recovery and realizations also recover? Because any qualitative aspect you can share there.
So I'll share a story with you that what happens in this, and it is a great learning for us, that when the prices fell 2 years ago, we used to have a sizable business in one of the East European countries. And we thought that we will not take this order, and that order went to China. And in spite of the fact that we are ready to do anything now, at any price we want that volume, but it is not coming. So the point is in this, I think one of the things which we also realized, just hold on to tonnages, because that was a sizable tonnage which used to go to any East European country. So I'm saying that this is a little strange business. We just acquired this company about 7-8 years ago, but this is the first time we were faced with a situation like this. So I think we have a lot of these kinds of learnings, and probably taking that loss would have been better, because when the markets go up like they were going now, I think we could have definitely had at least 15-20% capacity utilization more had we held on to those volumes. So these are a few learnings we have. I think my sense is that next time when it happens, probably it is better to take the hit, but keep the plants running the way Chinese do.
Right. Got it, sir. And Mr. Mukherjee mentioned that now earlier we were just doing kind of CMO products. Now we are doing early stage development also. So any qualitative update? Now it's been more than 1.5 years, about 1.5 years since we had that R&D center in place. So any qualitative aspect of how much benefits, like in terms of what benefits you see accruing in this business over 3-5 years?
So, I'm saying that there are a few things which I wanted to talk about. One is the plain molecules which we develop and we sell. So that I think that continues, and one of the molecules, metconazole, was the outcome of the R&D center. We did it at a record time, and we also grabbed some volumes which added to the reducing the losses. But I must also say that this co-development is a long-term process, and even longer-term process with even the innovators are having some tough time worldwide. So whatever used to take 2 years may take 3-4 years now. So that I think is the story as of now. So there are inquiries, there are collaborative efforts, but they are a little sluggish. Some of the very big innovators have banned international travel. So just because they are under tremendous stress. So I think all this will take a couple of quarters to clear. But definitely I must tell you that R&D center brought out this molecule. It is working with some innovators already on some co-development. The third thing which we need to talk more about is the kind of benefit it is bringing to our crop protection business by improving margins of the products we make, and that is evident in our P&L. In first half, you must see the crop protection business performance and profitability, and some of it has come from cost reduction initiatives undertaken at the R&D center. Plus, I think some of the back-end work also we will start doing for crop protection business, particularly in our hitweed, etc. If we can do some import substitution in time to come, so that will be a very big advantage in improving profitability further in crop protection business.
Number of molecules handled.
Yeah.
Right, sir. Thank you so much, sir. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you.
Thank you.
I hope I have been able to answer all your questions. If you have any further questions or would like to know more about the company, we would be happy to be of assistance. Stay safe and stay healthy. Thank you once again for taking the time to join us on this call.
Thank you, everyone.
Thank
You can now exit the call. Thank you to members of the management as well as all the attendees for making time.
Thank you. Bye.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.